Guys, what's going on? My name is Ryan. I like to trade ETFs and I make videos on the technical analysis that I'm seeing in the charts. Today we've got technology sector marked by ticker XLK, and let's get started. So starting off here on the weekly chart, we can see that we've had a momentous run up for the better part of the last 8 years here, 8 or 9 years. And before I get into the specific technical analysis here for XLK, I just wanted to talk about some interesting things that I see in Apple. Apple and Microsoft both are incredibly large players here in the technology sector space. So the chart for Apple is quite concerning to me for a couple of reasons. Most specifically because this channel right here has contained price very well. And we can see that as soon as we have a run up, it's very strong all the way up, and a run down is pretty strong all the way down here on the weekly chart. So we can see that 2 times before we've had 2 tops, and 2 times before we've had 2 bottoms. And right now we are hitting our 3rd top here at about the 157 point, and we have bounced off this top pretty convincingly, and we've started to move lower. I've drawn this intermediate. This is a channel here on the daily. This channel has contained the price for the last year as it's made its ascent up here to its all-time highs. And right now we are barely holding on to this bottom part of the channel. If we bounce off of this channel and move higher and try to retest, I don't see us getting much higher than the previous all-time highs. But it is possible for us to continue to move slightly higher than we are right now. We have seen a significant dip down. So this would be something to keep in mind, is if it does break down lower out of this channel would no longer be valid, and I can see us moving lower until we hit support here at this longer term weekly channel. The other interesting stock that I like to take a look at is Microsoft. And I've said this in the last 3 weeks of videos for technology sector, is that the market never repeats itself, but it rhymes. And so I can see that kind of playing out here with Microsoft. I've taken this low here to the absolute high. This is going back to 1995. And we take that clone here, right here. So for example, if we were to take this clone, drag it all the way over here to our low back in 2008, 2009, we can see that the same length of time it took to get to the high over here, as well as the same distance from the low to the high, is just about where we're at right here on Microsoft. We see a lot of profit taking marked by this high wick right here, and we are reaching extremely overbought territory here for both Apple and Microsoft. So keeping both of these in mind, we look at the technology spider sector ETF. So I've been slightly bearish or neutral on the technology sector as well as the semiconductor sector here for about 2 weeks now, and we can start to see a divergence take place here on our volume indicator, our CCI. And we can see that our high here is slowly slanting downwards. That means that buyers are not stepping in with as much vigor as they had previously. And we can see this is a divergence because price has continued to move higher as less and less buyers are coming in to pick up shares of XLK. We've been in this nice channel here for the last 8 or 9 years, and we very recently just broke out higher. This higher upwards movement represents, in my opinion, a somewhat unsustainable uptrend. We cannot keep moving with this vigor forever. We need to move sideways or lower at some point in time. I'm not able to predict what point in time. However, this sideways price action is fairly sustainable, but once we start going straight up like we are right now, this is kind of a parabolic move and represents an unsustainable price move, in my humble opinion. So moving on to the daily, we still see the same divergence now. It was only clear here on our CCI before, but now we see it in our RSI. We see this high here and this higher high, and this high in our RSI and this lower high. That's a bearish divergence, and we saw that actually play out recently as we dropped quite significantly one of these days, and we've been struggling to get back to highs. We have this long-term support line, which comes down here and touches this low, this low, this low. And so it'd be interesting to see if price continues to fall further, if this is a bear flag here on the daily, and we continue to fall down and reach this as our final destination. We have a smaller term channel. Remember, this is our long-term sideways channel here, going in a sustainable uptrend sideways, but this is a less sustainable channel that's been moving upwards, and we can see that it was supported here. We've had several bounces off of it, 1, 2, 3, and this is our 4th bounce, and this horizontal line right here marks the breakdown point, in which, in my opinion, would come to fall down here at the longer term support line. So from the daily, let's go down to the 2-hour. On the 2-hour, this was the chart I had in my videos for the previous weeks. I just decided to keep it up here. I said that I thought we were in a bit of an ascending wedge, which is categorically a bearish price pattern. And this ascending wedge actually worked out fairly perfectly. The technical target of an ascending wedge is back down to about the start of the wedge itself, and we can see that with this wick right here. We did come down to basically the start of this ascending triangle, but the psychology behind this is we come up, we set our A, B, C, D, and we actually break out a little bit below it, and we do not come back into the price pattern, and this is pretty textbook. We curl back up, and we come and set our E, touching the support line one last time before we see an all-out dump downwards. There was enormous volume here on this day when we crashed lower. We can see that we haven't had volume this high in many months here. The last time that volume was this high was probably over in November of 2016. So this is a huge move here, or a huge amount of volume, and I'd imagine a ton of stop losses got hit. This channel right here marks where my longer term support line was that I had talked about in my daily chart, and this is the 2-hour. So my ultimate destination, my prediction would be that price falls into this range over here in between the 61.8% Fibonacci and the 50% Fibonacci. Looks like we were saved by the 78.6 right here, and we have since bounced off of that. Let's go to the 1-hour chart and take a look at some divergences. So here in the 1-hour chart, we might have a hidden bullish divergence here. And this is very interesting to me because up here on the daily chart, we saw a bearish divergence across the same time periods, except for it was marking the highs. And here we have a bullish divergence marking the lows. So it's interesting how these things closely align with each other. But what is a bearish or a bullish divergence? So the classic one is when price makes lower lows and our indicator makes higher lows. But a hidden divergence, a hidden bullish divergence here is marked in this category, and it's marked by prices making higher highs, higher lows as our oscillator makes lower lows. And the psychology behind this is that price is moving sideways and giving our indicator time to catch a breather from recent highs, and once we've caught that breather, we go back to the overall price direction, and the overall price direction is moving upwards, marked by the lower lows. So here in the hourly chart, we can see a hidden divergence take place with this low here and this higher low, marked by this blue arrow, as our oscillator makes this low and this lower low. So what is a hidden bullish divergence? Well, a hidden divergence are primarily useful for trend traders, as the occurrence of this pattern signals that prices have made a corrective retracement in a larger trend and that the trend is ready to resume. The main benefit of trading with hidden divergences is that the majority of the market's momentum is on your side as you are trading in the same direction as the larger trend. This is a key difference between the hidden divergence and the classic divergence, and one that many new traders miss when looking to implement these strategies. The occurrence of a hidden divergence can also act as a confirmation that the original trend is still valid. Another thing is that the hidden divergence is a twist on the divergence scenario and can be seen in the hidden divergence, which is actually a continuation pattern and can, in many cases, be more effective in predicting future price movements. Similar to the classic divergence, hidden divergences are seen when prices fall to match the activity in the chart indicator. In a bullish hidden divergence, the following requirements must be met. The third, price activity is characterized as an uptrend. We definitely have an uptrend here in technology. Prices make a higher low. Prices here have made a higher low, and the indicator reading shows a lower low, or indicator reading shows a lower low. So with this description in mind, I think that this is a valid hidden bullish divergence. So that's on the hourly here. And it's also marked by some confluence here, as we have two Fibonacci's right around the same location. Let's go to the 30-minute chart. So last week, this is on the 15-minute chart, I threw out this crazy prediction that we might be in the beginning of a descending triangle pattern. I believe that we were right here at the bottom, basically, and we can see that my predictions have thus far been fairly accurate. And this is basically the price pattern. I go in much more in depth with this pattern in my analysis from last week. But essentially what I'm looking for is something like this. So we come up here, we came down, we set this kind of hump pattern, and we've been slowly moving up sideways, gap, and then this is to play out. Now I've charted all of that, but we are right here in between this gap right here. So if you keep this in mind, you can definitely see that this pattern is starting to play out. And what's interesting is on this fall, these two gaps actually did occur in the candlestick chart pattern. So this is kind of what I'm predicting to play out here over the course of next week, and I'll be very interested to see whether or not this long-term prediction, this is a prediction for about a 5-week price movement, actually plays out or not. We do have resistance right here, which is very strong resistance and where I think that we'll hit our top. However, we have not yet hit the top here, and once we hit that top, we'll be able to change the overall direction of this resistance line right here. However, given my analysis on the 1-hour chart that we have a hidden bullish pattern, it could be possible that we just blow right through this and go to all-time highs. So those are two possibilities, one bullish, one bearish. I am on the sidelines right now, so I don't have any specific biases towards either way. But if we do end up running up here in the technology sector and then getting rejected with conviction off of any level that you see, whether that is in QQQ, TQQQ, or XLK, or TECL, any tech stocks, if we run into a ceiling on your chart that's invisible and you get rejected off of it with some vigor, I would be more inclined to take this bearish descending triangle. However, as far as the longer term chart goes, this bullish hidden divergence is still playing out. Anyways, that has been my analysis for XLK, the Technology Spider Fund, and wish you the best of luck in trading next week. If you got anything out of this video, you just like hearing me talk, seeing some different viewpoints, different time frames, it takes me a long time to make these videos, and I'd really appreciate it if you would like my video or subscribe for these weekly breakdowns in the price action and my predictions. All right, take care. Bye.